Hey everyone, Kaveh Sartibi here with Mason McDuffie Mortgage. I hope that you and your family are doing well. You're safe and healthy. I wanted to reach back out to you with another quick update in regards to what's been going on in the mortgage markets. Last week, if you recall, we had talked about uh, one of the big reports that was going to be coming out, which was on Thursday, the initial jobless claims. Initial estimates had about 2 million people filing for unemployment, and that number unfortunately came in much higher at 3.28 million. This is about 5 to 6 times the amount that we had seen during the 2008 timeline. So quite a bit higher, and unfortunately, a lot of people who have filed for unemployment. We also talked about what the Fed is doing to kind of stabilize the markets. And one way that they were stepping in was to basically open up the banks, open up their wallets, and purchase a lot of treasury and mortgage-backed securities. Last week alone, in the mortgage-backed securities, the Fed purchased $183 billion worth of mortgage-backed securities, and this obviously helps to stabilize the markets and also lower interest rates. However, there's some unintended consequences because of that. One of the things that comes up is a lot of banks, when they come to lock in their loans, they're hedging against those loans that are going to be done here 30 days, 45 days down the road. And unfortunately, because of the markets improving as much as they did, there's been a lot of margin calls on that, and that's put lenders at in a position that they weren't really kind of seeing, and is actually hurting the market. Another thing that's been coming up that we have talked about is capacity issues. There's a lot of loans that are currently in the process, and banks just don't have the capacity to be able to take those on. So with the Fed stepping in, buying all this mortgage-backed securities to help lower interest rates and to help the housing market, unfortunately, those improvements have not been passed on to the consumer. Interest rates have not improved as much or anything at all during that time, especially on the high balance or jumbo loans. We are starting to see some loan programs, interest rates improve, but we're not seeing it completely passed on. There's a lot that goes into that, and one of our really good friends and industry leaders, Barry Habib, with Mortgage Back with MBS Highway, what he has done is put together a really nice article that kind of goes through what that is, what this process is, and how the Fed doing what they are doing, how it's actually not helping interest rates. And so I've got a link here in this in the email down below to that article. Really good article to read. I think it's really worth your time. At the same time, last night on Sunday, I sent out a special alert with a video regarding what the industry is doing to kind of really get to the Fed to really ask them to stop doing what they're doing, stop buying all these mortgage-backed securities, because it is not helping the markets right now. It's a great little video. It's about 10 minutes long. Highly recommend that you guys take a look at that as well. Now, moving on to mortgage programs and what we're seeing there, we've seen a lot of changes in the last couple of weeks regarding mortgage programs coming out weekly, daily, and a couple times on an hourly basis that we've seen changes. Now, first off, if you are currently looking at purchasing a home, or you have a client that's purchasing a home using an FHA or VA loan or in a refinance, please reconnect with your lender on those. There's been some guideline changes with FHA and VA, and in particular in regards to credit scores and debt to income. So make sure that you're still qualified with that loan program. Number two, on jumbo loans, loans that are above $510,400, or for the most part here in the Bay Area, anything over $756,000. We're seeing some changes in those programs. Either lenders pulling out of the market by increasing their rate, which really means that they don't want to take on some of those loans, or with loans that have higher loan to value, so lower down payment, lower reserves. Those programs are either backing away completely for those, or the interest rates on those are pretty high. So you want to make sure that, again, you still qualify for those loans. We've seen a lot of what we call non-QM, non-qualified mortgage lenders. These are lenders that basically put loans out with like the bank statement loans, low down payment with no mortgage insurance, low reserves. A lot of these programs and these lenders have completely actually backed out of the market. So again, if that was a loan that you were looking at utilizing to refinance or to purchase a home, connect with your lender and talk to them about that. Fannie Mae has stepped up in regards to appraisals, obviously with social distancing. They've come out with some guidelines on those. If we do not receive what's called a property inspection waiver, which is basically an automatic, we agree with the value that you're putting in to the system. If we're not getting those, there are certain circumstances that we're able to do what's called just a drive-by appraisal, where the appraiser doesn't have to come into your home and do a full inspection, and they can stay with their social distancing. So it's not with all programs, but there are certain programs that are out there that do qualify with that. So again, reach out to your lender, see if that's a program that you would be able to fit in with. One of the other things that I did want to talk about, because it's a question that comes up a lot, that April 1st coming up here in a couple of days, and there's been a lot of talk about not paying your mortgage forbearance. And the main thing that I want to say is, if you do qualify, if you do have the ability to pay your mortgage on April 1st, please make that payment. There could be some consequences down the road if you do not. Now, if you are not able to do that, if you cannot make that payment, just don't make it. Just don't go there and just not make that payment. Contact your lender, your servicer. You have to go through a process to get approved by them to qualify for the forbearance. And there's a few different things, programs within it. Just to kind of give you an idea, a general forbearance program, let's say if your monthly payment on your mortgage was $3,000 per month, you basically can qualify, or potentially can qualify, that you don't make that payment for 90 days or 180 days. However, with a forbearance, what that means is after that 90 days, so on that fourth month, when your $3,000 payment is due again, you actually have to pay the $9,000 that you didn't make the previous 3 months. So again, contact your servicer, contact your lender, see if you qualify, and then what programs under that you qualify for. Just don't not make the payment. That's actually going to hurt you and could have some consequences down the road. Again, a lot of these programs are going to come down to everyone's personal situation, and everyone's going to be a little bit different, obviously. So if you have questions, reach out to your current lender, or feel free to reach out to me. Be more than happy to talk you through any of the programs that are currently out there, or anything that we can do to help you during this time. Thank you for your time. I know this was a little bit long-winded, but wanted to get this information out as things have been changing pretty rapidly. Thank you so much. Stay safe.